This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. And I'm your host, Christine Lee, taking a look at our top stories of the day. Treasury Secretary Janet Yellen is convening a working group today to examine stablecoin regulation and risks. Announced on Friday, representatives from the top U.S. financial watchdogs will meet with industry representatives in light of the rapid growth in digital assets. Yale economist Gary Gordon and U.S. Fed Reserve Attorney Jeffrey Zhang also recently drawing a comparison between stablecoins and wildcat banking in a new paper. Meanwhile, Bitcoin's mining difficulty, a metric indicating the effort required to solve the complex cryptographic puzzle to mine blocks and validate transactions, recorded its fourth straight drop over the weekend. Difficulty fell by about 4.8% on Sunday, now standing at an 18-month low and 45% down from its mid-May peak. And finally, move over Bitcoin. El Salvador's government has plans to launch a native stablecoin that consumers will be able to use for services, according to a local paper, El Faro. The new Colon dollar is expected to be introduced by the end of 2021, according to President Nayib Bukele's brothers. And let's take a live look at Bitcoin. The CoinDesk Bitcoin price XVX index is currently trading at $30,633. Really approaching close to that 30,000 psychological support line. Bitcoin is down over 3% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
Bitcoin is stuck in a month-long downtrend as traders experience choppy conditions over the past few days. A break below 30,000 is likely given the loss of upside momentum and strong resistance on the charts, according to CoinDesk reporter Dominic Dantes. The Relative Strength Index, or RSI, is not yet oversold on the 4-hour and daily charts. You see that below. This means sellers are in control as buyers await lower support levels. If 30,000 is broken, the next level of support is seen around 27,000, which is a 60% retracement from the March 2020 price low. Immediate resistance is seen around 32 to 34,000, which could limit upside if buyers return. The options market also seeing increased demand for out-of-the-money or lower strike put options at 22 to 20,000 expiring on December 31st, according to over-the-counter desk Paradigm. That's a bearish signal as investors look to add downside hedges against long positions in the spot and futures market. All right, and joining us now to discuss Bitcoin is Mark Yusko, founder, CEO, and CIO of Morgan Creek Capital Management. Welcome to the show, Mark. So taking a look at Bitcoin, great to have you here. So, do you see a break below 30,000? What's Bitcoin doing right now? Are we headed for lower lows?
Yeah, look, there's a number of really, I would say, concerning, probably not troubling yet, but concerning items. You pointed to one, that downward descending triangle is a very bearish pattern. That's what we saw in the summer of 2018. We broke below 6,000 and there was a free fall all the way down to 3,200. And again, I'm not predicting that, but certainly when you get that congestion around that 31,000 level, it was actually 31,163 was the kind of neckline of that big head and shoulders we've made really since February. So there's a lot of unwinding going on. There's a lot of deleveraging happening, and that's usually not good for short-term prices.
What do you see as some of the biggest risks to Bitcoin right now?
I would say the short-term downward momentum is a risk. Now, that said, I've never probably been more bullish on the long-term perspective and the upside for the network and for accumulating ownership of the network. I talk about this all the time, right? Price is a liar. The daily price has nothing to do with the value of the network. The value of the network accretes every day. The more users, the more participants, the more active development, the more projects around Bitcoin, things like DeFi on Bitcoin, All these things are very, very bullish long term. That said, my personal opinion is we had a situation where the end of last year into the first quarter this year, we had a lot of free money handed out to people. And people turned from speculators literally into gamblers. They were chasing a moving price. They did it with leverage. That's always a very dangerous thing. Leverage can never make a bad investment good, but it can make a good investment bad in the short term. And so I think that all led to this place where everyone was looking at the same model. Everyone was looking at stock to flow. Everyone was sure we were going to 100,000 on Friday, which was kind of the estimate a number of years ago.
Is that still going to happen by the end of the year?
Pardon?
Is that still going to happen by the end of the year?
I'm probably in the no camp. My partners are probably in the yes camp. I think my personal opinion, I think what happened here is this cycle was truncated. I think some big shorts got on the other side into February and March, and they truncated this cycle. So we were probably headed well into the six digits with that run past 64K, and with the environmental FUD, which is just silly. It's just absolutely silly. But with that and the Elon tweets, again, silly. I think this cycle may have been truncated. And so now we've got to consolidate again before we draw back those speculators. Because speculators are what drive price away from the fair value. Fair value is going to continue to rise. I think by the end of this year, it should be closer to 50,000 fair value, 100,000 next year.
Is it a buying opportunity right now?
I think every day is a buying opportunity. I say this all the time, right? You should buy some today.
Yep.
You should buy some tomorrow. You should buy some next week. You should never buy it all at once. You should be accumulating using dollar cost averaging. And the most important thing is to own a piece of this network. This is the most valuable computing network our planet has ever seen. It is the most valuable network we will probably ever create. And owning a piece of that network is the most important thing for all investors. That's my thing on Twitter, #GetOffZero. If you have zero exposure to this, I actually believe you're in violation of your fiduciary obligation if you steward other people's money. And for your own money, I just think it's a foolish place to be today relative to a diversified portfolio.
Mark, a complementary to Bitcoin and the crypto markets are stablecoins, and that is getting a lot of attention right now. What do you make of Janet Yellen, central bankers, Paul Krugman, and the latest academic paper by a Fed attorney and a Yale professor saying that stablecoins are reminiscent to the pre-Civil War period of free banking in the United States that featured bank failures and monetary instability?
Yeah, look, I think it's a very interesting attempt at diverting away from the real story, which is the innovation. And look, the bankers have been doing this forever, for hundreds of years. The banks have had a good run for 700 years. They've been the trusted third party. And that has now gone away. What blockchain technology enables us to do, and Bitcoin in particular, is to create a system where you and I can exchange value without a trusted third party. Banks don't like that. And the big banks, particularly the central banks, don't like it a lot. And whether it's the BIS, whether it's the Fed, whether it's other central banks around the world, it's not shocking for incumbents to throw shade on innovative upstarts. And it's like JP Morgan at the turn of the century had famously quipped, I like a little competition. So the trust companies popped up in the 1900s after that post-Civil War period, and they were doing great. Knickerbocker Trust was doing fantastic. People were trusting it, and they spread a little rumor, arguably maybe it was JP himself, run on the bank, and magically JP and John D. Rockefeller bailed out the system and further consolidated their power. And then 6 years later, with Amory Aldrich, who was John D. Rockefeller's father-in-law, they created the monster from Jekyll Island, where Janet has sat at the Fed. And since then, they've been devaluing our currency and stealing wealth from the masses to give to the top of the food chain. Look, we have the highest wealth and income inequality in the history of the world. And it's because of this system of systemic inflation. Inflation is not good. Inflation is theft. And a deflationary currency like Bitcoin or like other stable coins are certainly a threat. And I liken it, Christine, to the turn of the century again. There was this invention called the horseless carriage. And the people that swept the streets in New York didn't like it much, right? Because their jobs were going to go away. So they handed out pamphlets as saying, if you got in a horseless carriage, you might die. Turns out the horseless carriage has been a pretty good thing. So incumbents will always spread FUD, fear, uncertainty, and doubt about innovation.
Yeah. It reminds me of the pamphlets of when electricity was invented, and you had these pamphlets showing people getting electrocuted everywhere, that there was a lamppost or whatever.
My grandfather-in-law took a job with the upstart American Airlines, and his parents were horrified because he was leaving the stable job of the train company. And they passed out pamphlets saying that the train companies passed out pamphlets saying if you got on an airplane, your body would cave in on itself once you went past a certain miles per hour. Again, silly stuff, but incumbents have a lot to lose. The banks have a lot to lose, and it's not shocking.
They're pushing forward their own digital currency, a digital dollar, the case for a CBDC as well.
Yeah, and again, digital currency is not a cryptocurrency, as you well know. A digital currency is just a digital form of fiat, and fiat currency is bad by design. It consolidates power in the people who can create it by fiat, by decree. And for millennia, right, since the beginning of time, every government that had a fiat currency has eventually fallen. Every empire has eventually fallen, and it comes from excess debt created by crony capitalism and government largesse. And the only way out, right? Once you get in debt, there's only 4 ways out. You can pay it back. Can't do that. You can restructure it. Can't do that because someone would have to take the restructured deal. You can default on it. But if you do that, you get kicked out of office, or you can devalue it away. And that is a choice every politician for the history of mankind has chosen. That's what they're doing right now in Europe, in Japan, in the United States, even in China, although they have a little different problem in their currency appreciating versus everything else. But digital currencies are not cryptocurrencies.
Just along those lines, El Salvador, there are reports now that they may be creating their own stablecoin, the colon dollar, which is a disappointment to some Bitcoiners who were hoping that legal tender would be focused on, in terms of a digital currency on Bitcoin. But what do you make of this new possible entrant in El Salvador?
Yeah, to your point, governments and governors, presidents and people who govern are never going to give up fiat, right? They're just not. And will they have to succumb to the fact that some of us will opt out with a portion of our wealth into networks like Bitcoin? Absolutely. It's already happened. Will they be forced, I believe, to follow El Salvador's lead to make Bitcoin not a legal tender? And at some point, it will become a reserve asset, right? It won't be the global reserve currency, probably for many, many, many decades, if ever. But it certainly will be a reserve asset, just like the dollar, just like the yen. And there was a time when people didn't think the renminbi would ever be a reserve asset. Today, it's held in the SDR at the IMF. So innovation happens, and it comes along slowly, and people fight it. And the incumbents, the reason a government wants a digital currency, it's awesome for surveillance. It's awesome for control. It's awesome for pushing a button to create more rather than fire up the printing press. But the big thing, and this is the scary part, I don't know if you've seen the video of the guy from the BIS talking about why they want a digital central bank currency. It's like, well, then we can control how you spend your money.
Yeah, I did see that.
If you're allowed to.
That is terrifying.
That is one of the most horrifying minute and 37 seconds I have ever seen. And I'm a hyperbolic person, and that is not hyperbole. It is a horrifying minute and 37 seconds, and everybody needs to see it because the ability for a government to control how you and I spend our money is insane. Well,
I think, Mark, that's why it's important to be part of the discussion as it is being talked about in DC amongst policymakers right now. We got to wrap it up there, but Mark, thank you so much for joining us this afternoon.
No, thanks for having me. I appreciate the call today, and I look forward to doing it again.
Yep. All right, that was Morgan Creek Capital Management CEO Mark Yusko. Taking a look at our other top stories, Bank of America, the second largest bank in the United States by total assets, last week approved trading of Bitcoin futures for some clients, according to people familiar with the matter. Some clients are setting up to trade Bitcoin futures, which are cash settled, and one or two may have already gone live, sources say. In May, Goldman Sachs also started offering Bitcoin derivatives to investors. And joining us now to discuss crypto adoption is Mike Belshe, CEO of BitGo, a digital asset platform handling custody and trading for institutions. Welcome to the show, Mike. So Bank of America, Goldman Sachs, are these your clients by any chance? Can you name any institutions you're working with who are warming up to the new financial system?
Well, one of the parts of being a good service provider is you don't talk about your clients per se. I can't say Goldman Sachs publicly invested in BitGo several years ago, and what we've seen in the run up over the last 9 months or so, what's been such a bullish thing for the industry is that institutions are all participating. I mean, frankly, we had institutions coming to the market back in the last run up, 2017, 2018. They didn't quite see the infrastructure that they needed in order to participate at that time. And most of them kind of handed it off to family offices and others to participate. But in this last 9 months, and a lot of it fueled by the backdrop of the pandemic, they're able to participate. They look around and they see a system that they can utilize. It doesn't have overburdened counterparty risk that they're subject to. There's a little bit of market structure around it. Regulatory compliance is much better understood. And overall, that's why we had such a great 9 months.
So we're seeing the crypto markets fall back right now. So are you saying institutions, they want to enter crypto there, or are they still in a wait and see kind of mode, or are they just behind altogether?
Everybody we talk to is still moving forward. It is true that we're seeing a bit of a retreat kind of in the right now, but none of these institutions are saying, "Oh, we're gonna back off and come back in a few years" or anything like that. The Bitcoin in particular asset class has proven that it's here to stay. This is no longer a 5-year-old thing. This is a 12-year-old industry. And it's here to stay. So they see the writing on the wall for that, and they're looking to participate. The backdrop of the money printing that's occurred with stimulus, and a new lever for the government to pull, I suppose, just further amplifies the reasons why digital assets Bitcoin is so valuable.
Mike, I wonder if you can contrast this with what is happening with Binance. They're in damage control mode right now. They're facing a lot of regulatory challenges all over the world, seemingly coordinated almost. Was it a mistake to grow too fast and not play the long game that other exchanges like Coinbase and Bitstamp played?
Look, this is an emerging technology, and how do you participate in a legal way is not as obvious as you'd like it to be. BitGo started one of the most, I think, mature companies in the space, having been all the way back in 2013. And when you talk to attorneys, about what's the right way to interface with the market, attorneys are without their tools. Typically, they would lean on case precedent, examples of how others are doing business. And when it comes to digital assets, in addition to having all of the questions they have about this very different type of technology, they don't have any case precedent. So, look, Binance, I think, getting clarity on how it's going to participate in the market, what its regulatory framework is going to be nothing but goodness for the overall industry. It's going to clean things up. My biggest fear is not what happens or doesn't happen with Binance. Actually, one of the challenges I think we've had with the banking system is once you build a tremendous amount of regulatory hurdles, you can actually end up stomping on innovation. And we saw this, before digital assets and blockchains came to market. There aren't a lot of new banks being created in the United States, and we really, really need the system to improve. So I hope that we can get regulatory clarity without squashing innovation.
All right, Mike, we got to end it there, but thank you for joining us this afternoon. Appreciate your time.
Thank you so much.
That was BitGo CEO Mike Belshe, and that's it for All About Bitcoin. I'm your host, Christine Lee. Join us tomorrow morning at 9 a.m. in New York for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.